Competing against banks is great. They're slow and they run on really obsolete technology. For us, it's always been about the fact that you control your money, your data, and identity being a basic human right.
Hey guys, and welcome back to Altcoin Buzz Spotlight with me, Layah Heilpern, the show where we speak to entrepreneurs, innovators, and thought leaders in the cryptocurrency and blockchain space. Joining me on the show today is Kris Marszalek, the CEO of Crypto.com, the company that was built on the idea that everyone has a basic human right to control their identity, their data, and of course their money. With over 2 million users already on its platform today, Crypto.com aims to provide an alternative to the traditional financial services. Don't forget, let us know who you want us to interview next in the comment section below. And if you enjoyed the segment, then don't forget to hit the like button. Kris, it's great to have you on the show today. How are you doing?
Very good. Thank you for having me, Layah.
Yeah, absolute pleasure. And this is your fourth time speaking with us since 2017. So tell us, how's the journey been since the initial ICO back in 2017?
Well, our journey actually started a year before the ICO, and June is our 4th anniversary. So it's been quite interesting. I mean, we've started with an idea to challenge the banks, and that was just written on a napkin. And 4 years later, we've got 2 million users and 350 people in our team globally. So it's been a very exciting journey so far.
Yeah, absolutely. It has been quite an interesting journey. But before we delve straight into it, I do want to get your thoughts on the market and want to get your thoughts particularly on Bitcoin, because we've had the halving. We had the kind of that, I guess you call it a mini bull run. We've had the price go up. It's kind of gone back down again. So I just wanted to get your thoughts on it. What do you think is happening right now?
Well, if you look at the nature of the cycle, this is what we've seen in the last few cycles. So there is always a little bit of a run-up as we approach the halving. It's a big event for the whole industry. And there is a couple of months, probably 6 months or so, of a cool down following the halving before the actual, the effect of the reduced daily flows of Bitcoin from miners to the market in terms of the selling pressure before this reduction impacts the overall market performance. So I think we're very happy about how it's going so far this year. There's a renewed interest from institutional investors, some big names going out there and supporting Bitcoin as a fantastic hedge against inflation, what's happening with the quantitative easing around the world. At the same time, even on the day of the biggest crash, the Black Thursday, when crypto dumped 40-50%, we've seen a lot of retail inflows from the fiat into Bitcoin. So we think that there is a very strong support for Bitcoin, and I personally think we're gonna see another all-time high next year, 2021.
New all-time highs next year. Okay,
yeah.
That's very exciting. But yeah, absolutely. I think, despite the price, I guess, sort of dropping down below 9K right now, actually, we've seen unprecedented amount of institutional interest in the space in Bitcoin. So really not something to be too disappointed about then. Now, back to Crypto.com. I want to understand what inspired it, because you must have seen a problem within the traditional system and felt, okay, we have a solution and we will answer that problem. So tell me more about this.
Yeah, I mean, this company was started from the dissatisfaction with banks, and if you want to pick an incumbent, pick a bank. I mean, they're big, they're slow, and they're not particularly customer centric, and they run on really obsolete technology. So competing against banks is great, and our approach to it was to partner with some more forward-thinking financial institutions and launch a product first, and then gain distribution, so grow customer numbers. So now we are at 2 million people using the platform, and it's a global platform. It's the only card that is available in the US, and Asia. We just announced that we've got a green light for Canada as well, and there's a few other markets in the pipeline. So what this gives us is the ability to right now, when we reach the scale, to go and get regulated ourselves as as a company, so that we can remove the kind of final advantage that the traditional financial institutions have over startups like us. We will be regulated just like them pretty soon. We're in the process of getting licensed in multiple jurisdictions as we speak, and getting to this stage, with it took us already 4 years. I think we are less than 2% done with what we want to achieve, and going forward, we will have ability to do even more interesting things to fulfill our mission. And for us, it's always been about the fact that you control your money, your data, and identity being a basic human right. So we're working towards that lofty goal.
And, just 4 years down the line and already 2 million users. So clearly there's something people are finding very attractive about your services. And I think one of those things has to be what you can earn, those interest rates, because you can even get up to 12%. I think I read somewhere 18%, depending on how much you stake and, whether you lock your money in or whether you don't, whether you make it flexible or not. So we have to talk about this because firstly, how is that possible? How can you be offering 12% interest rates when the likes of Europe are offering negative interest rates? And also, what are the risks involved with this? Because surely the higher the reward, then the more risk.
So first of all, we've got products in 3 different areas. One is payments, the other one is trading, and the last one is lending. So the number one source of user acquisition growth is the payments product, like our Visa card or Crypto.com Pay. And we think that this is going to continue to be the number one reason why people download our app and use our products. Now, our approach and to get the distribution is to subsidize the products on the payments front, and then subsequently make money as a company through trading revenue and through lending revenue. And on trading front, that means that, we've got an app with 50 coins you can trade back and forth, fiat in, fiat out. And also we've got an exchange for people who want to have a professional trading experience with an API and whatnot. We also got a product in lending space. So if you deposit Bitcoin, we give you a stable coin, and it's typically around 50% LTV, and we earn interest income. And people typically pay double-digit interest rates on this, and they use these stable coins to trade, buy more coin, or they could use it for whatever other purpose they want. Maybe they can just spend it offline. But the fact that we have the lending business gives us the ability to offer attractive rates on the earned product and still make money as a company. Because for us, we earn the spread between whatever interest is generated through the lending product and we have a cost of money on the earned product. So we act as a platform here. So from the user point of view, we eliminate the risk for the users. Obviously, there's always a counterparty risk, but as a company, we're one of the gold standards in the industry in terms of security, privacy, and compliance. So perhaps those are slightly lower, but I think it's a very attractive product.
And I do just want to focus on the risks just for the minute, because when we do talk about 12% interest rates, I think for people not already in the space, this does sound crazy. I mean, the UK where I'm based right now are not offering anything close to this. So I want to talk about backup and insurance plans, because if anything happens, if there was a hack for whatever reason, what would happen if you weren't able to give that money back? Because after all, not your keys, not your coins.
Yeah, absolutely. And every customer needs to understand that there's always risk, and cybersecurity threats are always top of mind for us. So as a company, we've got ISO 27001 certification. We are PCI DSS compliant, cryptocurrency cybersecurity standard level 3, and some other certifications are yet not announced. We've also secured a total of $360 million of insurance covering the funds that are stored in cold storage on our platform from multiple insurers. And 100 million of this is a direct insurance that Crypto.com secured directly with a syndicate led by Lloyd's, which I'm sure you're familiar with in the UK. So these guys, before they offer direct insurance to anybody, they will go and look at the entire setup to make sure that they don't have unnecessary exposure. And they've done their homework and we've secured it. So those are the mitigating factors. There's obviously a much more, because this is the entire defense in-depth approach where, you know, we need to look at every single angle and have a very strong security culture within the company to keep the funds safe. But fundamentally, those risks are being managed by us. And, you know, for us, it's an existential threat in terms of being compromised from cybersecurity standpoint. So this is absolutely top of mind, and we do everything that we can to keep our customers' funds safe. 100% of our user funds are stored in cold storage. Any hold wallets, we are just using our own capital to fund those. So we're doing our best to mitigate risk. There's no such thing as no risk, unfortunately, but we do understand that we're dealing with people's money. And this trust that 2 million people have in us is our greatest asset. So we will do everything in our power to not to disappoint.
Okay, well, thank you for addressing that. Now, Vays has been promoting Embly Card, which has partnered with Union Pay and with MasterCard. Now, he has called Crypto.com a scam, and MCO and CRO, actually, he's called them illegal securities. So it's really important that we hear your perspective on this.
Yeah, so look, people always have their own incentives to from other companies trying to do something interesting. The fact that he's promoting some small startup, I mean, I'm fine with it. It took us 4 years to get where we are. Let's see how the other guys do it. I mean, it takes probably 7 to 10 years to build a globally compliant fintech product. And we started with compliance as the base foundation for everything that we do. So that's why large institutions partner with us. That's why we've got $360 million of insurance. That's why we've managed as the only company in this space to roll out a card program on a global scale. It's not trivial. So I think talking about stuff is easy, but I think our actions speak for themselves. And everybody can see what we've accomplished so far as a team, and we're going to accomplish much more to drive the mission of Crypto.com, which is adoption of cryptocurrencies globally. We're going to drive it to completion until you see cryptocurrency in every wallet. So, the other aspect of it is that people who are so-called influencers, they love to stir the pot because it puts the spotlight on them and whatnot. My approach is just to ignore this kind of stuff and just focus on building a product people want to use, and so that the company that we are building has a real impact on this industry.
Now, let's stick with MCO and CRO for the minute. So looking back, why did you guys think you needed to create two cryptocurrencies there? Why did you think that was necessary? And how effective is that, I guess, for the ecosystem?
Well, we're building a new public chain, and it's a very complex endeavor. We started towards the end of the first quarter of 2018. Now it's been a little over 2 years, and we are just in testnet stage with Crypto.com chain. And we felt very strongly that a new coin is needed because what we are rebuilding is a payment network that is going to, once live, be a successful replacement to networks like MasterCard or Union Pay. And in this complex system, one of the things that you need to make sure is taken care of is that incentives are built both on the merchants accepting using the network to accept payments and on the user side. You need to have critical mass on both sides. And the reason why nobody effectively disrupted these large payment networks for a very long time is that this chicken and egg situation is extremely hard to overcome, and it costs billions of dollars in investment. So our approach was to start with a carte blanche in order to define, first of all, what does this chain need to do technically to accomplish it? And secondly, what is our go-to-market strategy going to be in order to reach a critical mass and solve this chicken egg problem? And third, how do we design incentives for all the participants in the ecosystem to increase the chances of success? And the conclusion was that it can only be done with a new coin. So we did it. And again, it's still very early, so don't judge us on the result yet. But I think if we have this conversation in 2 years' time or in 3 years' time, everybody will agree that this was the only way to go.
Yeah, and I think it's really important to sort of acknowledge that everything is still new in this space, whether it's crypto.com or whether it's everything. And you can't be shouting scam, you can't be judging just yet, because at the end of the day, we're just seeing a lot of entrepreneurs just trying to build something. And there's always going to be problems at those early stages. But I do just want to get a little bit more specific now, because I and 5 other members of the Altcoin Buzz team actually use crypto.com, and we use the card regularly. So let's sort of go through a couple of issues that we've had with it, and you can shed some light, and hopefully we can get to the bottom of this. So I want to start with exchange fees. Let's go so you guys do crypto to crypto and fiat to crypto. So what are the fiat to crypto exchange fees, and what are the crypto to crypto exchange fees? And also, does this change depending on how much money you're exchanging? Like on Coinbase, for example, the more money, the less clear it is. I think if it's over $200 or something, it's not as clear, what those fees are going to be.
So you mentioned Coinbase, right? So one of the use cases of crypto.com app is, that's just massively reducing your fees versus players like Coinbase. And if you compare like the card, we're probably on average 5% cheaper on every transaction than Coinbase. If you compare trading on crypto, our basic retail app spreads are, 2-3 times smaller than the spreads you'd pay on Coinbase Pro, right? So, which is the professional trading environment. So no matter how you cut it, we are always very competitive from the fee standpoint. And most of the stuff like deposits through a bank transfer, or with, even you can buy debit and credit card, is free on the platform, free. And the reason why it's free is because it's part of our mission to drive adoption of crypto globally. So we try to make it as simple as possible and as cost efficient as possible for people to get into the market. Our approach is that we need to be fair to our customers always, but at the same time, we've got a good selection of coins on the platform. And if you have 50 coins, some of those coins are not liquid. And as a platform, we can't create liquidity where it doesn't exist. So if someone wants to buy, I don't know, $10,000 of some coin that has, $300,000 of daily volume at best, then they're going to eat into the order book in the marketplace, and they'll have to pay a fee. But this is not, our source of revenue. It's just the fact of that in the market there will be spread, and on illiquid coins the spread is higher, and that's just the way. I mean, sometimes people don't understand this, but for every willing buyer, there needs to be a willing seller in the market. And a lot of coins in the market at this moment in time have very thin order books. So we encourage users to pay attention to it when they buy a smaller coin. Try to spread the orders over time, or make smaller orders and whatnot, because they will simply have adverse impact on their average cost if they do like big orders.
Now, I want to look at UK users because for whatever reason, the service isn't fully available to users over there. So one of the issues that I understand is that it's quite difficult right now to send money or receive money to a third party. So I, as a UK user, can deposit and withdraw money to my other UK bank account, but I can't do a bank transfer to a friend, for example, that's also in the UK. So firstly, why is this? And secondly, when will this be available?
Um, so first of all, this is not only limited to UK users, we just don't allow it on a global scale.
Okay.
And the reason is that it's much easier for us to control the compliance side of things, meaning transaction monitoring and looking at source of funds. And there's a lot of issues on compliance when you allow third party bank transfers. So we're very strict on this. And again, for a cryptocurrency company, we're very conservative, and we want to make sure that the funds that you deposit to our platform are coming from you and from you alone. And when you withdraw funds, you withdraw to your bank account, and you can do with it whatever you want at that time. But at this moment, we do not want to offer the third-party bank transfers to our users. We will probably offer it at a later stage, but not for now. And the fact that we are always a very conservative company in terms of our approach to AML and allows us to have very strong relationships with our banking partners around the world. And we will continue to play this kind of role. And as I mentioned, the company is in the process of getting regulated in multiple jurisdictions, in Europe, in the UK, in the US, Singapore, Australia, pretty much in all key markets. So we just feel that it's not worth for us to take any type of risks as a company that tries to get regulated and licensed.
Okay, now I do just want to stick with the UK customers for the minute because you can't actually transfer locally to a UK account. I think it would have to be an international transfer because, for example, like I said, I'm based in the UK and all I'm offered is USD or Euro. So I have to set up a Revolut account and then...
Yeah, the FPS is on our roadmap, and we will make it available at some point in Q3 specifically for UK customers. So you'll have both deposits and withdrawals through FPS in GBP, and it's a very convenient and fast way to deposit and withdraw funds. At this moment, I hope it's quite helpful that you can buy cryptocurrency for free with debit and credit cards, and you can top up our own card with debit and credit for free as we wait for the FPS solution to go live. The other solutions for Europe, meaning the SEPA transfers, are on, but we understand that for the UK we need to have a specific solution. We're working on it.
Yeah.
Coming soon.
Okay, well, that's great to hear. Now, speaking of coming soon, a couple of followers have actually asked me online whether you guys will be coming to Pakistan and whether you'll be coming to, whether you're going to Puerto Rico, and where else will CDC actually be going next?
Okay, so if you look at our roadmap, what we've committed to is that we're going to launch programs in Canada and Australia and Latin America next. There's a bunch of other markets that we're looking at, places like, for example, Turkey, where cryptocurrency is the adoption is pretty solid and it's a large market. And then gradually you want to have global coverage. But again, for most of these markets, you need to have local presence, sometimes local licenses, a capability to issue Visa cards locally. And it's a complex project. Typically, from the beginning to completion, it's a year and a half to 2 years even sometimes. So we need to look at the largest markets first, and eventually cover the whole globe. I mean, our ambition is to just have full coverage and be available in every market.
Okay, now just finally, can you give us some juicy information, something that nobody else knows about the upcoming CRO mainnet release? Can you give us some information? What can we expect?
Yeah, so we are targeting the mainnet launch to happen sometimes towards the end of this year. It's a very ambitious goal, and the team is working very, very hard to accomplish that. I mean, just people need to understand that the testnet phase is absolutely critical, so that we iron out all the kinks, because going to mainnet, this is a true permissionless blockchain, and we're talking about billions of dollars in other people's money that are at stake here. So we must absolutely be certain that it's going to work as designed and without any issues like security and whatnot, right? So we are working towards this goal. It is very ambitious, and we hope to be able to share some good news with our community October, November.
Kris, I want to thank you so much. It's been an absolute pleasure having you on the line with us today and answering these tough questions. So thank you so much, Kris.
Yeah, the questions were not particularly tough, Layah, so maybe we can try harder next time.
Next time we'll try harder. Thanks, Kris.
Thanks a lot. All the best.